guys, 2 more days left in August, and kind of feels like it in a lot of ways. The market is weird again, as per usual, but there's a lot of, what I think is really happening is that, as we've mentioned all along, there's a hyper reactivity going on news items that really shouldn't be as reactive. Today, we've got S&P, Dow, and NASDAQ down significantly, in my opinion, because a 1% move on the consistent all the way through the month after such a big rally, it's such a huge give back, but it really does tell you tomorrow, the last day of the month, we shall see, and then we're off onto a big vacation weekend. Oil giving back 4%. The talking heads are suggesting it's because Iraq came in with a little bit higher numbers, but remember, there's just such a shortage right now. And as I mentioned, it will be volatile until we get through closer to October, November. And that's just because we will get a better sense for what each and every company or country, excuse me, is going to do to shore up their energy reserves through the summer. Now, I think it's funny because Consol Energy, which I love, is getting beaten up quite a bit today. I think of it as a give back more than anything. And in fairness, the way that I'm structured is via a diagonal. So I'm always slightly hedged on that, which is nice because, I have to pay for those hedges if they go against me, so to speak. So right now it's helping me out, but it's still the case that no matter what we do on oil and gas, coal is still going to be part of the solution for Europe as they manage through this period, because there's just not enough oil and gas. I don't know another way to say it. We burned a lot of reserves as we tried to figure out a solution. So there's that. When I look at the map, you can see this huge give back on energy. I probably should have been louder about hedging yesterday. I definitely bought puts on the XLE, and I'm really uncomfortable whenever I own them for too long, but I think it's probably prudent to hedge out your oil for just a little bit. Although I think if it dips again below 90, I just feel really stupid hedging those names out. But generally speaking, given how red this market is and how few names are green, this is really just a closing it down. My suspicion, again, I need to do a video just on what it means to reduce gross. So the institutional markets, a lot of times, if they can, they'll reduce gross exposure, and they do it one of two ways. They either hedge their risk by buying puts. They will sell calls to reduce gross exposure reduce net exposure. But if you're asked to reduce your gross exposure, there's really only one way to do it, and that is to close out your positions. I will go through that at some point because I think that's interesting to folks that are not institutionally educated in this stuff. But you guys got other things to do. I get it. It's fine. But this is what it looks like to me today: is the reduction in gross more than just a sell-off for the sake of sell-off, because there's really no news. And today I'm going to go through the economic data. Best Buy, which reported, that was not a good quarter, even though it came in better than expected. This is why I listen to the calls myself versus just taking what the news says. And then I'm going to talk about the home builders. Oh, I don't think I said past performance, not indicative of future returns. So there, it said you are disclosed as far as that goes, the disclosures there. Okay, so in economic news, today we had an employment report as per usual, and I always think it's really interesting. It's like backwards world, okay? Typically, non-farm payroll employment rose by 528, meaning that there's less, and unemployment edged down to 3.5%. Usually you would think this was good news because the economy is doing well, but because of the nature of what's going on right now, this makes the inflation bears very, very worried that the Fed will not be able to tamp down demand enough to control prices. That's really what it is. Can we control prices? And again, as we mentioned yesterday, food and energy, they are not going to be looking at that portion. They're going to be looking at the inflation numbers ex food and energy. So this is a thing that somehow, despite being a positive from a how's everybody doing, does everybody have a job perspective, is creating this pressure on the marketplace. And I think that's the nature of a supply-driven issue. We really do have to get food and energy to be created. Food is going to continue. Well, energy is going to continue to create issues on the supply chain, period, because it isn't just energy, so to speak. And also food and energy going up is going to continue to create a particular behavior within the employment market. And then it's just a function of, can we get demand to soften a bit so that we can engineer what they call a soft landing? So that number, not very helpful today. But again, this is a weekly number. To be this reactive in the marketplace is just very difficult. But man, I got to give the day traders credit. Again, Rich who's our guy, the Rich Method. Check out gurulu.net because he's really just killing it and having a good time in a market that's creating volatility in a way that's really special. I mean, it's such a volatile market. Now, Best Buy, it beat the street estimate, but this was a horrible earnings quarter. Let's just call it what it is. And this is despite the fact that I really love the CEO. I think she's done a fantastic job trying to manage through a pretty tough environment. But fair and square, revenue was down year over year. It is against tough comps because last year, a lot of people were still making work from home purchases. Additionally, we've just seen quarter after quarter on the CPI data, which does break out electronics. The numbers just haven't been good. And I get it. We have back to school possibly in the third quarter, but let's just call it what it is. You know, we're not yet seeing it at all in the economic data. She might get a little bit of a blip from back to school because really it's August, September that gives you that. And we're just not seeing it. And if you do the numbers, her gross margins did come in just a tight touch as well. So she's doing the best she can to operate in this environment, but this is essentially a bit more of a down 50%, maybe a little bit more on EPS. And there's nothing that can really, there's no extra going on. I mean, she is absolutely executing on the things she wanted to, but, and those are great things. But is she having a good time as a CEO? I don't think so. I think she's doing great, but I think the market environment is just not helping her. Now, as a result, you know, if you're trying to play volatility on this, or if you're trying to run up with momentum since this stock was up today, be very careful. Go ahead and get out of it, I would say, by the end of the day. For me, I'm probably better short on this one, but cautiously so. Okay. Let's see. The other thing I just wanted to show you on home builders, and I think it's really interesting with the home builders because there's a lot of talky talk, and every time the home build index comes out and the various numbers on housing comes out, these guys get clobbered a little bit more. And across the board, these guys are actually great companies. I mean, great companies. They're really hanging in there like rock stars. They are not overbuilding. So I want to just show it to you because if we get any change in the macro environment, these guys cosmetically from a valuation standpoint are going to look so undervalued that it's insane. They're not where I would be crazy bullish on them. For that, I kind of need, I'll show you exactly what I'm seeing in the numbers to see what I would say, okay, now we've really just become ridiculous. I can't do this. I can't stay out. But I got to say, it's kind of ridiculous. I want you guys to have a set of videos where you can kind of see the dynamic. Will they trade down? Will they trade up? That's not really the point of today's video. Here is what the National Association of Realtors are showing. And so when people say, hey, I'm seeing prices fall, or I'm seeing this, I'm seeing that, and then you've got this other set of people that are saying there's a housing shortage, this is the organization that is the one that's talking about it, okay? And they produce this map, and you can see if it's very red, there's a high housing shortage. If it's blue, there's totally enough supply. And depending on where you sit in the United States, you have a very different image and picture of what's going on. But this, I thought I'd show, you guys can investigate it. For those that are more part-time, you know, market players and full-time, so doing something else, go on to the National Association of Realtors website and pick up what is your local area if you're interested in buying a house. But there are definitely some areas, even in Florida, which is such a, always talked about as the state of extreme growth. That is true, but it really depends on what parts of Florida, because you do have a mixed bag there. And then California is massively in shortage as relates to housing, as is a huge swath of the Northeast. Now, I want to show you, therefore, why you do have some home builders that are crushing it. And then a lot of the small cap guys, because they see a very different picture than I see, that is what it is. So I'll do them in order of the ones that I think are doing best to like still really, really good. I have three that are in my space in the S&P 500, Lennar, Pulte, and DR Horton. And really in order, you've got Lennar, which is ever so slightly lower end in new home build, but not low end by any means, because this is still a brand spanking new spotless house. Okay. And then you have the Pulte, which is high end, and then DR Horton is America's largest home builder, but tends to be at a slightly higher price point, market by market. But then you have to kind of see how it all amasses. But if we look at Lennar, this is why I'm like, wow, they are really, really in a healthy balance sheet state. And you look at this and you still see huge growth year over year. And you have inventories that are up a little bit, but not more than you would anticipate them to be up given the change in housing prices, because you do actually mark these ever so slightly different way, which is why Lennar, out of all of the home builders, to me, does the cleanest show of their numbers. Now, realize that the financial service business is them giving incentives, them giving lending directly, and multifamily is more or less flat. Okay, I will say that the REITs that do multifamily are showing a very different, very positive picture. So I wouldn't take this as something bad in multifamily so much as this is just the layout of the type of build that they're doing right now. And then in other, they are actually spinning out property management business as well as a couple of other businesses. But all in all, this is super, super healthy. That's why you have net income way up. If you were to just do this based on valuation, the numbers look insane because you have top line growth that is crazy high, right? This is well over 20%. Bottom line growth that is even larger, gross margin expansion. It looks really great. Region by region, they do the breakout for you, and you can still see this is 2020 for delivered homes. They still are delivering more homes year over year. You can just look at the end number. This is because they are a beautiful new home, but at kind of a lower price point than some of the other new home builds that are out there. Then again, really just realize this is a general statement. There are regional builders that might be doing something in your market where you see something different. So I wanted to show you this. New orders, they still have slightly higher, like they're still getting about the same new orders as they were in the communities and then homes. So what is that? If you're driving around and checking out where they have this new community build where Lennar is also doing, a pool, maybe a clubhouse, stuff like that. That's what this is. And then homes are like the single standing homes that they also do. In both cases, they're still seeing, increase year over year. And then you can see regionally, it's all going well, given where they're specifically located. Okay, I will say that I was starting to be like, should I just buy Lennar then? They were actually quite cautious on the call. They're like, look, interest rates is absolutely hurting us. That's what it's designed to do. That is what the Fed is trying to do. We get it. So we're not going to be crazy about the way we use capital. We're not going to be stupid about how we manage our balance sheet. Hence this, they expect to start to run down inventories a bit and not try to do anything too crazy to bring up inventories, despite the fact that in many of the markets that they are in, it is still a massive housing shortage. So that's what's happening with Lennar, meaning that if you get any stabilization in inflation. Remember, it's not, if you're a young buyer right now, you might be either really needing to buy a home ASAP, or alternatively, you're thinking about this differently and you're like, well, maybe rates will just stop rising or what have you. But once rates stabilize and then there's less uncertainty on if they're going to continue to go up or it's just going to be, this is how it is. And then a little bit of time passes. These guys are all in phenomenal shape. They're absolutely not overbuilding, and they do represent the three largest. Okay, Pulte, I want to show you similar dynamic. Here highlighting as well, financial services is a smaller part. This really indicates that they are probably even more cautious about overbuild. Here's what their inventories look like. It's up just a little bit on housing, but this number right here really tells you that Pulte is not they're not playing as relates to making sure this balance sheet is clean. The residential loans available for sale means that they are getting all the loans that come in on the homes that they build off balance sheet as soon as possible. Now, they did also discuss this, that because the Fed is actually doing its job, lumber prices are coming in as much as 10,000 per house is what they think they can save if this continues for with the current prices that they're seeing. But really, copper, steel, all of those prices are coming in, and they're excited for it because they do still have some orders that they've got a backlog. Like, all these guys actually have backlog. Now, is the backlog less than it was last year? Yes, it is. Okay, 19 versus 20, 20,000 homes. But are there some markets that are still showing very high backlog? Yeah, Pulte's in Florida, and in that particular market for them, because they must be in the red area of that map, kind of tells you that, but you always should double check. They are still seeing plenty of backlog. And yeah, and then you can kind of see that there's another thing, I didn't show it here, that because average selling price is still rising, they are able to push that through, but you can kind of intuit that concept from the fact that you are still seeing great gross margin expansion here. So Pulte also doing well. DR Horton, where'd I put them? Here. DR Horton, yeah, DR Horton, here's their deal. Home sales also, you know, this is a good company. I just am never a fan of how they present their data relative to the other two because I have to think so hard. I'm sure there's someone else that loves exactly how they present it, but for me, I hate it. But you are getting gross margins that are better. So 23% versus 18%. And you are seeing still really solid new home sales. They are also Forester, that is the land business that has been going well. So what they're doing is managing where their assets are and so on and so forth. It's all it's all more or less the same at DR Horton, except for the finance business, but that's such a small component of their revenue. I wouldn't think too much of it. I would say that the sales data looked ever so slightly weaker for DR Horton, which tells me that you might be getting a little bit of a different picture from these three large cap builders versus the small mom and pop shops that are doing it locally. And this is still a very unconsolidated business, so to speak. I mean, you've got three big gigantic guys, four if you really include NVR, which you can't really get any volume on it anyways, and it really is Northeast that's creating the numbers. But you really do have these three big home builders that are the ones to watch to get a picture of what's going on in the major markets where you would see building, ta-da, the ones that are red. And this is approximately what they're seeing. But because I see that that the inventory numbers are slightly worse at DR Horton, but really when we say slightly worse, we really mean slightly worse, okay? This is not enough to get too excited. Again, the consumer's hanging in there, and I don't see craziness as relates to inventories. I do see higher inventories, but the things that they had to say there is that there is a little bit of seasonality given where their markets are. They are not putting on inventory like crazy, and they do anticipate that in the third and fourth quarter, as they deliver the homes, because a lot of this is construction in progress, they'll be just fine. Now, the other thing that they mentioned that is actually quite fascinating is that for all three builders, for folks that renege on their house, so they put the money down and they're like, oh no, I'm out, or they put kind of this initial kind of prepayment down on a new home that isn't built yet. Most of it is done still at this point in the 30-day grace period, meaning that it's usually because they couldn't get financing, which so they're free and clear, or alternatively, it's buyer's remorse. So we're not seeing it in the 60 and 90 day where it's someone not having enough cash money to continue with that home purchase. Instead, all of them reported that most people really need this home for a reason that has to do with family, work from home. You're still getting all of that happening for them in their area. Hence, I wanted to just kind of do a quick review of it, because if literally anything changes on the macro front that could possibly bode well, these guys are buying back stock aggressively. Like 4 million shares is what Lennar bought back, and they're going to continue to do so because their company's in good shape. They don't want to continue to buy or do activities that might put them in a bad scenario financially if things continue to worsen or if this extends out for a period of time. So this is a very different picture than 2008, despite what others will say, but you really got to watch your timing. And in that regard, I think the metric where I'm going to be watching is how much are these guys going to be pushed down in book value? Because the one thing I want everyone to remember is that book value for these guys can sometimes be understated, and it can be understated because it depends when they took that land in inventory and what has subsequently happened on the appreciation of that land or whatever it might be. That's part of the reason why something like Forrester, which is more in land and lot sales, can generate some really lovely returns for these guys. And with that, I will stop sharing and take questions.
Okay, hey, man, Dave. So you're saying the home builders are managing this well?
What's that?
They're managing it well.
Yeah,
the home builders.
they're managing it so well. These are the cleanest. These were some of the best reporting companies because they were able to get pricing through. So they show on revenue year-over-year growth that is very large, over 20% across all three. And then they show on bottom line growth something well over 20%. So they're getting all of it passed through. So there's no extra weirdness on costs. They're still able to offset any loans that they're giving people. Do you know what I mean? So like sometimes on financing, they can say, oh, you know what, I'll actually give you financing because your credit is great. I want you to buy this house. It's going to be amazing. But they're still able to sell those loans out. So it is a really, really positive dynamic. If you get any improvement, you could get the Fed deciding that it's going to pause on increasing interest rates. You could get, you know, the market, the financial market stabilizing to where you can start having deals come back. You know what I mean? You can have interest rates. I mean, you could have really literally anything that would allow you to open back up the market is going to just do really well for these three home builders. Now, in small cap land, traditionally, there will always be that builder that is too inexperienced and starts doing really stupid things for sure. But among the large cap guys, I'm not seeing it. In fact, I'm seeing the exact opposite, and I'm seeing them buy back stock.
And the fact that home prices are coming down actually is not negative for home builders.
Not necessarily. Yeah, it's not necessarily a negative. It's not a positive for sure. You know, I'll say that.
Well, more people can afford houses if they're cheaper.
I mean, yeah, I mean, it really it depends.
Wages are going up. Right.
Yeah. Okay. 100%. That's all true. I guess the way to think of it is it depends on the gross margins that they end up getting. Right now, they're still able to push through costs because even if house prices decline, they're not declining as fast as some of the raw material costs that were crazy last year on that initial reopening. So we'll see some of that.
Yeah, their costs are going down like lumber. Yeah, they're going down. So yeah, I like this.
Yeah, so far, I wouldn't necessarily go piling into the home builders today because, you know, why would you do that? But I would watch them, and really I'd watch them for book value. I think I should have put a screenshot on their book value, but if you look at like Lennar, and I would think of the three, I think Lennar does actually look slightly better than the others. It may be because of the markets that they're in, or it may just be that they managed an even tighter ship, but all three of them are doing great and they're buying back stock. Lennar's trading just over 1x book value right now. If Lennar gets clobbered, if we get like a weird market correction, which we could still have as people are on vacation this next week, at 1x book, Lennar probably is okay to start accumulating. I don't think you go crazy into these names at any point, but the fact is they are actually behaving not anything like 2008 for the record, for everyone that's just pretending like they are doing the same dumb stuff that we happened. Like it's just such a different marketplace than 2008. And I think, yeah.
I think you've mentioned people are relocating to like the South.
Yeah. Relocating to the south has absolutely been a theme. Like, this is not a today buy it. Let me just be clear. I'm actually waiting myself a little bit to see if I can get closer to one times book for Lennar, because I actually think that at one times book, that book is understated. You're already buying it for sub book value. But it's
Okay.
coming there really
Watch
close.
them. I like it. Yeah. So they look
Yeah.
okay financially. Just
All
you
of them
know,
look okay financially, and
okay.
all of them are starting to trend closer and closer to one-time book. So I wanted to just have a little something so you weren't like, oh my God, last minute, why is she doing this to me, sort of thing. And they're all
Well,
trading.
oil looks like an opportunity here.
Oil does too. Yeah, yeah, especially on the dividend yielding names. It's just I feel like yeah. I'm picking my spots on fertilizer as well. I hedged out fertilizer because the rally was so aggressive on both oil and on fertilizer. The rally's been aggressive. I kind of want to wait till next month and just see what the next 2 days hold. But in fairness, if your time horizon is 2 to 3 months, if you only have this holiday weekend to make some positions happen, this weakness is probably an opportunity across all the names that you guys know we love.
Cool. Okay. Thanks, May.
All right, cool. Have a great time in this markets. Good luck tomorrow for month end. Bye.